Steelforce was the first investment we made as an independent fund. It was a manufacturer and distributor of steel products. And the investment thesis that really we took on was that we had a manufacturing operation in the north of China in Dalian, and it could produce Australian standard steel products under our own manufacturing and our own supervision and quality control using similar inputs, in particular things like paint, etc., that was being used in Australia. And we could do so at about a 20% plus cost advantage to the local industry. We looked at the local industry and said it's really an oligopoly in terms of supply of certain of these areas between what is now Bluescope and Onesteel. And we felt that by coming in at that lower cost, we could get enough market share to drive good margins in our business, good growth. And the strategy worked until it didn't. And it didn't really in two parts. One is that we grew very quickly before the financial crisis. And as the financial crisis hit, we were exposed to the cyclicality of, the construction industry and manufacturing construction. And so we went from making a lot of money to not making a lot of money, which caused obviously lots of pain. But the other one was that we completely misread what the competitive response would be. And, we felt at that time that we were too small to make a difference to the big guys. And, they went after us with a sledgehammer. They met us in the market on pricing, drove the pricing down in the market. We spent a lot of time in court defending dumping actions and, probably took us 10 years, but we got most of our dumping duties back. So we had to pay the duty up front and then had to go to court, fight the action and get the recovery of the duties. After we were beating them on the duties front, they changed the Australian product standards to basically exclude us. We again had to go get that change back. So it was an extraordinary competitive response. And I think the lesson out of it for us is, Bluescope is actually a very successful company. Onesteel no longer exists. One of those companies, which is obviously Bluescope, was able to adapt in its environment and survive, and Onesteel didn't. And Onesteel's view of the world was, we don't want the world to change and we'll do anything we can to avoid change. During the financial crisis, they weren't prepared to raise capital, pay down their debt because they didn't want to dilute the existing shareholders. And Bluescope took it on the chin, raised money and was fiscally responsible. Onesteel, was autocratic, didn't have a culture that in any way facilitated open debate about the strategy. And here's a company that was in the ASX 20 and it doesn't exist anymore. So we were ultimately able to kind of weather all of that storm, and we ended up selling the business. We didn't get all our capital back, got about 3/4 of our money back over 13 years, which is the other lesson in private equity: patient to an extreme. And if things aren't going well, you can't call your broker and sell your stock. You've got to work it out. And, it took us 13 years to work it out. And, I think that helped us in our reputation with our investment partners that, we're just not going to walk away from a battle. You got to see it through and do your best to the very end.